Wow, 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 and what can change in a few hours? Okay, oil is now down 4.4%. I did have to panic sell out of this one. I do not want to get stuck in something like this day over here. I only added small size in it. I lost probably 0.3 to 4%, so not too bad of a loss on oil, but I did get out. Once it starts bottoming again, though, I do want to look for a bounce. Okay, now that oil has confirmed a sell-off, I'm going to get bearish on this market. Intraday, we are sitting near lows, so I'm going to have to make a decision whether to reverse my position here and see if we have some more downside momentum, or just start cutting my size back, basically. I'm gonna get it out of my short bond position for now. I think it's gonna be a while now till we have a sell-off in the bond market. I think economic pressures now in the U.S. will take a toll on the U.S. stock market. So yeah. After this unemployment report, I was expecting we were going to see a bullish outcome, given the fact that it wasn't too bad. But, you know, I'm now starting to think, since we're breaking down and we're not really getting much buy side, much interest, especially just looking at the technical picture. The technical picture is just not looking good anymore. I have to sell out of my positions, and I'm going to take a loss on them of about probably 1.5%. So today so far wasn't a good day. We'll see if I could make it back in some way. But hedges and volatility, being long puts, has been good today, just making some of it back. And I'm going to start cutting out of my longs. So that's just an update for you guys, short little video. I do want to keep this blog updated because today was sure a quick day in the market. You can see the last 15, these are 15-minute bars. We haven't seen one up bar since 8:30, which is the employment release. And, you know, that's kind of just making me think we should start to see a bounce at some point. But, you know, you can't really, you don't really know. And the reason I say that is, look at last year, you know, 2011. Not saying we're going to repeat this, of course, but after, you know, the rally in the stock market kind of petered out, and we started breaking some levels. We started failing to make new highs, which is kind of what's happening right now. We're failing to make new highs. We sold off pretty hard, and it was very relentless. It's been since November. No, sorry, since late November, since the central banks of the world have coalesced together, have combined together to pump liquidity in the market, and, well, in the bond market, which would obviously feed over into the stock market. And, you know, we were nearing the end of that as well, which is exactly what happened in 2011. Once QE2 ended, bam, we had the major sell-off. Many events came into play at once. So, just want to update, I am out of oil. I do feel like it was a panic sellout, but you kind of have to take the loss when this is happening. You know, you never really know what can happen, especially in a commodity like oil, where it can do one of these. And it's not a good feeling to be in a position, a long position, when oil's dropping relentlessly and not showing any pullback. So we're cutting out of that. Long positions in natural gas, we're going to take profits in that because we need to take some profits. Copper is now starting to roll over, and you can see the breakdown we're seeing here, and I'm probably going to cut out of that too. It does look like we're starting to reverse, so I'm going to put my bets into a correction in the risk-on assets now. I think it's I kind of believed we were going to see maybe one more rally before this, but that's not coming. Well, at least the market's not letting that happen, so we gotta take the bear side. Alright, so moving out of my risk-on positions and going to I'm going to go risk off on a pullback.